I think there's some lessons learned before we get into what could be an interesting situation in veg oils. Okay, so just something to ponder and think about. Again, I think that because of Argentina, the issue in Argentina, this market's leaning one way, heavily one way, when it comes to South American production and forecasts. This is how I look at South America. I follow a lot of things, so I try to keep it quite simple. I do not care what Brazil produces, nor should you, as long as it's over 57 to 58 million tons. Keep it simple, stupid. I'm a farm kid from Idaho, so I try to keep it pretty simple. That's the gist of it, because that's what their infrastructure can handle. Okay, if they produce 62 million tons, okay, guess what? You're just going to export. You'll have a little bit longer tail that will coincide into the U.S. export marketing year next September of 2010. That's a long ways off. So as it relates to Brazil, again, as long as they're over 57, 58 million tons, great, happy days, boom, there's Brazil. Argentina, I'm surprised in a way that more people don't talk about it. I think there are rains, in the forecast, and yes, that's great. I'm actually much more concerned about their draft levels. They cannot load full Panamaxes right now. They're having to split load. No one's talking about it. And I think that's a very big concern in terms of, let's say they have a production rebound. Okay, what kind of logistical issues are you going to run into with the Argentine situation? Again, something to monitor. Something to monitor on that side. So I think in general, it was very interesting. I've been trading here this morning. November futures did go through 917 in the ords, 3/4, excuse me. They did break through that. They traded as low as 910.5. Okay, but we are seeing some commercial buying. It is back over 1917, 1917.5. She feels like she's trying to correct here. And like corn, you're dealing with seasonal lows, which I think will be put in earlier in soy than corn, given the very tight cash situation. Okay, we are going to have a delayed harvest in the U.S. There are no more beans coming into the pipeline in the volume that's needed. In fact, if I'm an exporter, I do not want to be short, or I would not want to be short or have sold September loadings. Beans or meal. You're going to be paid a massive premium. I don't think the market's going to take out the inverse. In fact, one of my positions that I do actually like a lot is to bull spread Nov Jan, Nov March beans. That's one way to play it because you're in a minor carry, and I think the inverse is going to roll forward until we know exactly. Again, the market, prove it to me, right? That's another theme. Prove it to me. Prove it to me that we actually have beans coming into the pipeline. Okay? Prove it to me that we have a production issue. These type of, there's a lot of proof that this market wants now. It's no longer just buy it because, whatever cool themes out there. There's a lot of proof that this market wants. So I do like it in that sphere. So I think if I can encourage anything, I do think I like booking some meal ownership, certainly Ocnov and into December, and then we'll see how it shakes out. But you'll have meal coming out of India, which is great, but Argentina is crickets. And Argentina is the world's largest meal and bean oil exporter. And Argentina also is using a lot more of their bean oil in biodiesel. Who doesn't love differential export taxes? Funny. That's been a significant driver in the investment there. And their government, the Kirchner administration is just mind-blowing. They managed to do the one thing that could never be done in Argentine history, which was unite the farm sector. That's just unheard of in Argentina. So that's been quite interesting, and I think you're going to, again, have political issues that influence the soy complex. Okay. So those are kind of priced. What ones I like, what ones I don't like. I think if you want to take a punt on a possible corn freeze or corn frost, corn issue, I do like buying December 9 corn futures and selling D's 10. Okay, you're at a, say, 51, 52 cent carry. That's a pretty low risk, possibly, pick up some nice change if that spread is to narrow. Okay, and we have seen that. The July SEP spreads have narrowed. The September DEX spreads are narrowing. That's another way to play it. Okay, so outside influences. And I'll be more than happy if anybody's bored and wants to see my trading platforms, certainly can, and my trading systems and kind of what I follow. But first and foremost on my screen is the US dollar index. This is not the market that it was 12 months ago. I do not trade this market like I did 12 months ago. The dollar index is very influential. There's no doubt about it. If it's lower, typically, there'll be a week at a time where commodities will be higher just because the dollar is lower. This market's very fickle in terms of what it wants to trade. Sometimes it's fundamental, sometimes it's Chinese demand, sometimes it's the dollar index, sometimes it's technical. It's this constant kind of pick a flavor. And it just emphasizes the flexibility. It emphasizes that whoever you're using for price risk management or for information, make sure they're equally flexible and giving you the information they need. I think, I'm not a currency expert, but when it comes to the dollar, I don't want to buy it. I don't want to sell it. Pretty neutral. Not real thrilled that that there's possibly it looks a little shaky here into the end of the year. You had China buy $50 billion of the IMF bonds. We'll see what happens with that. But the U.S. dollar really feels like no man's land in general. But certainly, if it's weaker, again, that's an inflationary concern. A weaker, there will be money that will chase commodities on the back of a weaker dollar. Okay, that's something to accept. Whether it's rational, whether it's irrational, it is what it is. Again, inflationary concerns. Okay, if the word inflation starts popping up, commodities is a safe haven. Again, just something to be aware of. And U.S. consumer confidence. I mean, the U.S. consumer is not spending much money. Unemployment continues to rise, and yes, the recovery is kind of intact, but we have some significant social issues popping up in America on the back of healthcare, on the back of cap and trade. We're in turbulent and emotional times in the States. IMF world projections. I think the emphasis here is just, it's not a developed. This is not a developed economy show anymore. This is not a U.S. Europe pulling the world out of this one. Okay, this is the emerging and developing markets. This is Brazil. This is China. Actually, probably this is China. This is Brazil. This is Southeast Asia. This is India. Okay, it's not Russia, and it's not the U.S., and it's not really the Euro area. And we'll see what happens with Japan, but probably not there either. There's been a lot of talk about this, but kind of like the slide in terms of just the emphasis. Okay, we are bringing more people in. This is why I think, again, when it comes to agriculture, food, natural resources, truth be told, about a year ago, went in with a group, and we have bought about 100,000 acres in northern Brazil because just believe in the agriculture production and the food and feeding the world thesis. It's kind of it's our time to shine, if you will. If you entered agriculture when I did, which is probably well after some of you all, it wasn't sexy, it wasn't glamorous, but in the past, say 5 years, you've gone from zero to hero in many of the spaces, which is kind of interesting. The growth rate, the bottom part right there, between 95 and so in 5 years, the growth rate was 78 million people, or the equivalent of a new China every 15 years. And we still can't even get our hands around China. Okay, what are